further to our group project. I will be introduced the report by describing the background for our children service companies and the business nature. We are choosing Celcom Digi Berhad and Maxis Berhad to report the financial analysis. Both of the company are behemoths that have influenced Malaysia's digital environment. Let's begin with company background. Celcom Digi Berhad were established on 2022. It is the synergy of two big telecommunication companies, which is Digi and Celcom. Next, for Maxis, the company were established in 1993 and started their operation in 1995. So we move to the services offering. Celcom Digi and Maxis Berhad are likely offering same services, which is broadband internet, mobile voices, and data plan. In market position and strategies, Celcom Digi focuses on affordability, network reliability, and innovation for consumers and businesses, while Maxis Berhad prioritizes technology leadership through investment in 3G, 4G Lite, and 5G, emphasizing innovation and strong network infrastructure. Lastly, the impact on Malaysia's digital economy. Both Celcom Digi and Maxis are pivotal in advancing Malaysia's digital transformation and connectivity. They drive the telecommunication sector through technological advancements and customer-centric strategies.
Financial ratio analysis. A financial ratio evaluates the past, current, and expected future performance of a company. This makes it possible to compare the performance of a company over an extended period and in comparison to its competitors. We are going to conduct an external comparison or cross-sectional studies of two companies, Maxis Berhad and Celcom Digi Berhad, to determine the kind of ratio that we should apply. In addition, the following 5 categories of significant ratio will be covered, which are liquidity, efficiency, leverage, profitability, and market ratio. Current ratio is a liquidity ratio that evaluates how well a business can pay short-term within a year. Based on the calculation, Maxis Berhad had a lower current ratio than Celcom Digi Berhad. This shows that its liquidity position is lower than Celcom Digi Berhad and can lead Maxis Berhad face problem when paying the short-term obligation on time. This is due to the least current asset to cover its current ratio determines if the company has enough asset to satisfy its current liability without selling inventory. According to calculation above, both companies had an asset test ratio of less than 1. Thus, both companies will be unable to meet their short-term obligation. However, Maxis Berhad should be cautiously approached due to its lower asset test ratio than Celcom Digi Berhad. Besides, Celcom Digi Berhad's asset test ratio is lower than its current ratio, indicating that the company current assets are significantly dependent on their inventory. This demonstrated that Celcom Digi Berhad facing overstocking.
The first one, inventory turnover ratio. Inventory turnover ratio shows how many times the inventory is sold and replaced in a year. From the table, we can see there are significant difference on the inventory for both groups. Celcom Digi Berhad has a larger inventory than Maxis Berhad, thereby indicating a higher inventory turnover ratio in Maxis Berhad compared to Celcom Digi Berhad. This proves that Maxis has their inventory faster than Celcom Digi Berhad and does not face any overstock problem. However, Celcom Digi Berhad has a lower inventory turnover ratio, indicating the company is experiencing poor sales and has excess inventory. Average collection period. The average collection period is a financial indicator that calculates the average number of days it takes a company to calculate payment from its consumer after a sale. It is an important indicator of an organization's efficiency in managing its account receivable and cash flows. Based on the data, we can conclude that Maxis Berhad manages its account receivable more efficiently than Celcom Digi Berhad. Maxis Berhad has an average collection period of 53.11 days, whereas Celcom Digi Berhad is 69.75 days. Maxis Berhad shorter ACP implies that the company collects receivable more efficiently. Efficient receivable management is critical because it improves its cash flow, preserves liquidity, and lower the risk of bad debts. As a result, Maxis Berhad outperform Celcom Digi Berhad in terms of account receivable, fixed asset turnover, and total asset turnover. The fixed asset turnover ratio is a financial metric that assesses a company's ability to generate revenue from its fixed asset. This ratio is critical for determining how well a corporation generates revenue from its fixed asset, which includes property, plant, and equipment. After comparing the fixed asset turnover ratio of Maxis Berhad and Celcom Digi Berhad, we can conclude that Maxis Berhad has greater use of its fixed asset to produce income. Maxis Berhad has a fixed asset turnover ratio of 1.89, which implies that it's an RM 1.89 for every 1 ringgit in fixed asset. Celcom Digi Berhad, on the other hand, has a fixed asset turnover ratio of 1.4, which means it's an RM 1.4 every 1 ringgit invest in fixed asset. A greater fixed asset turnover ratio indicates more efficient utilization of fixed asset to generate revenue. As a result, Maxis Berhad ratio indicates that business is more effective at using its fixed asset to generate income than Celcom Digi Berhad. The total asset turnover ratio is a financial metric that assesses a company's effectiveness in using its asset to produce revenue. It demonstrates how effectively the company uses its entire asset to generate revenue. Maxis Berhad outperforms Celcom Digi Berhad in terms of total asset turnover ratio. Maxis Berhad has a total asset turnover ratio of 0.45, which means it's an RM 0.35 in revenue for every 1 ringgit in total asset. Celcom Digi Berhad, on the other hand, has a total asset turnover ratio of 0.35, which means that it's an RM 0.35 for every 1 ringgit in total asset. A greater total asset turnover ratio implies a more efficient utilization of company asset to generate revenue. Thus, Maxis Berhad greater ratio indicate that company is more adept at exploiting the total asset to create revenue than Celcom Digi Berhad.
Next, we will discuss about the debt ratio, where the debt ratio is a leverage ratio that evaluates the degree to which a company has used debt to finance its asset. Maxis Berhad's debt ratio indicates that 40% of its assets are financed by debt. Meanwhile, Celcom Digi Berhad's debt ratio was approximately 41% in year 2023, showing a higher debt ratio may be due to heavily invest in new projects or expansion plans that require significant capital, which is being funded through debt. Comparing both groups from a financial risk perspective, Maxis Berhad is more better due to its slightly lower debt ratio than Celcom debt to equity ratio. The debt to equity ratio is a leverage ratio that provides insight into how much debt and equity financing a business is utilizing in relation to its asset and operations. Maxis Berhad's debt to equity ratio was approximately 1.6 in year 2023 compared to Celcom Digi Berhad that had 0.9 for their debt to equity ratio in year 2023. Maxis Berhad had a higher debt to equity ratio, maybe due to financing significant capital expenditures or quick expansion with debt, which can boost growth but also raise its financial risk. Therefore, Celcom Digi Berhad might be considered the better company in terms of financial stability and lower risk due to its lower debt to through the times interest earning ratio, where the ratio measures a company's ability to meet its interest obligations with its earnings before interest and tax. Time interest earning ratio for Maxis Berhad was 4.13 times compared to 4.52 times for Celcom Digi Berhad in 2023. Comparing both groups, Celcom Digi Berhad has a slightly higher time interest earning ratio than Maxis Berhad. Maxis Berhad might still underperform due to its strategic investment and growth potential. Therefore, Celcom Digi Berhad is in a slightly better position than Maxis Berhad as it has a greater ability to fulfill the interest obligations and ensuring financial stability.
For the first profitability ratio commonly analyzed by firms are gross profit margin or GPM. The gross profit margin shows what your business made after covering direct costs like labor and materials. It's one of 3 key profitability ratios along with operating and net profit margins. So, in this comparison, Celcom Digi had a high ratio rather than Maxis, meaning that Maxis Berhad did not show the efficiency in controlling costs of Next is operating profit margin, OPM. It shows on how efficiently a company managed their expenses to maximize profit compared to other company. So, in this project, Celcom Digi Berhad again have a higher ratio than Maxis Berhad since their operating expenses are controlled. Thirdly, net profit margin, NPM. The ratio for Celcom Digi Berhad is 0.12, which is higher than Maxis Berhad, 0.098. So net profit margin is a crucial indicator for investors to evaluate a company's profitability and the effectiveness of its cost management. So in this case, Celcom Digi Berhad make a high profit and have a good financial health compared to Maxis Berhad. Next, for ROE. What is ROE? ROE is return on assets that measures how efficiently a company's assets generate revenue. It's sometimes referred to as return on average assets to highlight the use of average assets in the calculation. As we can see in the table, the net income available to common shareholders have a great difference, which is Celcom Digi Berhad is profitable than Maxis Berhad, same as the total assets. But for the ratio, the both companies likely have the same result. This is because their net income and the total assets are balanced. Lastly, I end the profitability ratio with return on equity. It's a financial ratio that measures the profitability of a company in relation to its shareholders' equity. In essence, ROE indicates how effectively a company is utilizing its equity to generate profits. So, in this calculation, they are slightly different from previous slide for ROE. Maxis Berhad leading the ROE, which means the profit earned by Maxis Berhad by the common stockholder is higher than Celcom Digi Berhad.
Now we will discuss about market ratio that include EPS, DPS, DPR, PE, and DY. Firstly, EPS or earning per share measures a company's profitability and indicates amount profit is attributed to each share of stock. Celcom Digi Berhad demonstrated stronger financial performance compared to Maxis Berhad in year 2023 due to its total EPS 13.2 cent per share compared to Maxis Berhad with only 12.7 cent per share. Maxis Berhad's lower EPS could be due to various factors such as higher expenses, lower revenue growth, or greater share dilution. This shows that Celcom Digi Berhad may be offering better returns to its shareholders on a per share basis. In for the DPS or dividend per share, it indicates the amount of dividend received by ordinary shareholders for each unit of ordinary share held. Maxis Berhad paid 16 cents, meanwhile Celcom Digi Berhad paid 13.2 cents dividend per share to their existing ordinary shareholders in year 2023. Maxis Berhad distributed higher dividends per share to its shareholders than Celcom Digi Berhad. Celcom Digi Berhad's lower DPS might be due to several factors, such as a focus on reinvesting earnings into business growth, paying down debt, or conserving cash for future opportunities. Maxis Berhad appears to be the better company in terms of direct returns to shareholders due to its higher DPS that suggests more profits returning to its shareholder in the form of dividends, which may be appealing to income focus or dividend payout ratio. It depletes the proportion of earnings that is distributed and given as dividends to shareholder. DPR of Maxis Berhad was approximately 126%, meanwhile DPR for Celcom Digi Berhad was 100% in year 2023. Maxis Berhad's high DPR shows a more aggressive dividend policy that could potentially impact its reinvestment capabilities, while Celcom Digi Berhad's DPR shows a balanced approach where it returns all its earnings to shareholders but retains nothing for reinvestment. However, Celcom Digi Berhad can be considered as high growth firm because high growth firms usually have lower DPR as most of the profits may spent for investments and expenses.
Next, the price earning ratio compares a company share price to its earning, indicating how much the investor are willing to pay for each ringgit of earning. Celcom Digi Berhad has a higher price earning ratio of 41.5, suggesting the investor expect higher growth or stability. Maxis Berhad has a lower price earning ratio of 22.3, which may indicate more conservative growth expectation or that the stock is undervalued. In summary, Celcom Digi Berhad's higher price earning ratio shows greater investor confidence in its future growth compared to Maxis Berhad. Dividend yield show how much a company pays in dividend issue relative to its stock price. Maxis Berhad has a dividend yield of 4.6% based on a 16-cent annual dividend and a share price of RM 3.45. Celcom Digi Berhad's dividend is of 2.8% with a 13.2-cent annual dividend and a share price of RM 4.71. This means Maxis Berhad offers a higher return through dividends, making it more attractive to income-focused investors. A higher yield often indicates stable earning and strong cash flow, enhancing its appeal.
Now, let's take a look at SWOT analysis of this both company. SWOT is basically an acronym for strength, weaknesses, opportunities, and threats. So, firstly, for Maxis Berhad, they have a strength, but Maxis Berhad holds a significant share of the Malaysian telecommunication market, and Maxis is also well in the country, which prove they have a strong brand presence and customer loyalty, and have a stable financial in terms of consistent revenue growth and profitability. Other than that, the company also introduced an innovative service such as extensive portfolio of services, including advanced digital and Internet of Things solutions. That's really into the weaknesses. The demand in the company insists they have a high operating cost, especially for expenditures on network maintenance and expansion. Other than that, Malaysia have limited geographical diversification. With limited geographical reach, these companies may experience a market situation in Malaysia. This means that the opportunity to acquire new consumers or increase revenue from existing clients is constrained. For the opportunities that this company can grab is recently the 5G service industry is expanding rapidly as telecoms carriers deploy high-speed wireless connectivity, opening new opportunities in communication, entertainment, and enterprise solutions. Thus, expansion of 5G services offers significant growth potential for Maxis Berhad. Besides, collaboration with technology firms and other industry players can make a good impact on the company, especially for their company's performance and a booming in industry. Last but not least, threats that may be faced by Maxis is, without being comfortable, the company will also feel intense competition between other companies, especially other telecommunication providers. In addition, future changes in regulation could impact operation. This is because companies are frequently compelled to invest in compliance procedure by new rules which can be expensive. This includes staff training, system updates, and reorganizing specific corporate procedure. Hence, rapid technological advancement requiring continuous investment if there is disruption occurs. Moreover, with the uncertain economy today, there might be an economic fluctuation which can affect opportunity for Celcom Digi Berhad. The strength created by the synergy between Celcom and Digi telecommunication brand surely can enhance their competitive position in this market. With the combination of product portfolios, this offers a wider range of mobile, broadband, and digital services, especially to fulfill their customers' needs. Additionally, they have the cheapest postpaid plan. This plan is most suitable for users who are only allocated with minimum budget for the monthly phone bill. But the weaknesses that companies may be challenges are in integrating operation, system, and cultures of Celcom and Digi, since that they might face a higher operating cost along with significant expenditures on network maintenance, upgrades, and customer service. For the opportunities, the future that Celcom Digi Berhad grabs is by decreasing the prices. Decreasing the cost of transportation can lower the shipping prices, which can also bring down the cost of their international products, thus providing an opportunity to the company to boost its profitability or pass on the benefits to the customers to gain market share. On the other hand, the adoption of modern technology standards and government free trade agreement has provided them with the chance to enter a new emerging market. Additionally, the new taxation policy can significantly impact the way of doing business and can open new opportunities for established players to increase their profitability. And last but not least, threats that may be faced by Digi Celcom Berhad is changing consumer buying behavior from online channels could be a threat to the existing physical infrastructure-driven supply chain model. As more consumers prefer online shopping, foot traffic to physical stores will be decreases. This can lead to underutilization of physical retail spaces, which are typically significant investment for telecommunication
So previous
companies.
analysis shows competition between two big telecommunication companies, Maxis Berhad and Celcom Digi Berhad. These industries are compete towards each other to provide a great product and service for their customers. Hence, this part will discuss and provide our opinion on the likely future general financial condition of both companies, the ability to further grow their companies and be more efficient in terms of generating future, and lastly, we will suggest to the board of directors on which telecommunication companies is worth to be invested into the future general financial condition for Maxis Berhad. Maxis Berhad reported a 4% increase in revenue. Its highest EBITDA is 5 years, driven by growing mobile users, home connectivity demands, and business sectors. Based on this, Maxis will stand to gain profit from its present plans package, which is centers on postpaid plans, 5G plans, and high-speed fiber plans. In the future prospect, in our opinion, Maxis' investment in the plan will pay off in terms of growth revenue and stable profit margins. However, Maxis shows a greater gearing ratio. This shows how much the company relies on debt funding. In the future, if Maxis can effectively regulate and manage debt financing, it will produce more profit and improve its Financial Berhad's 2023 financial report shows a rise in EBITDA and service revenue, indicating a robust digital strategies, improved home fiber, and enhanced synergy performance. In our opinion, if the company decides to increase its home fiber and digital plan offering in the future, it will result in significant growth. Additionally, it is anticipated that the synergies would improve overall operational efficiency and make futures general financial planning for far more cost effective. On the other hand, Celcom Digi debt ratio is comparable to Maxis, but the realization on synergy enables the company to efficiently manage its debt level. Thus, for future financial strategies, Celcom Digi Berhad may enhance and manage its business in the future by growing its package such as home fiber and digital service like postpaid and prepaid. Furthermore, Realizing on a synergy will be crucial for Celcom Digi's ability to properly manage debt in the future during
After analysis, both Maxis Berhad and Celcom Digi Berhad have the potential for further growth and efficiency in generating future returns, foremost generally through the adoption of modern technologies such as 5G, digital transformation initiative, and strategic partnership. However, their ability to achieve this will depend on some several factors that we have to investigate, such as effectively navigating industry trends, maintaining financial health, and managing competitive and regulatory risks or strategic initiative. Firstly, Maxis Berhad is one of the leading telecommunication companies in Malaysia with a significant market share. Up until now, this company has demonstrated consistent sales growth and profitability over the years. Based on financial analysis that has been made Based on financial analysis that has been made before, Mrs. Berhad has a strong cash flow. This indicates that this company has an ability to invest in growth and manage its operation efficiently. While for Celcom Digi Berhad, they also been a major player in Malaysia's telecommunication business with a large customer base. This company has also continually shown great financial success with healthy revenue and profit margins. The most impressive part of their financial health is about their debt levels because managing debt levels effectively is crucial for sustaining growth and investment. To give a recommendation to the board of directors on which company that we should invest, we must look on the overall analysis. So, given the overall analysis, Celcom Digi Berhad might be the better choice for investment due to its strong liquidity, lower financial risk, higher profitability, and better market perception, indicated by higher EPS and price-earning ratios. These factors suggest a more stable and potentially higher growth company, making it a more attractive option for long-term investment. However, if the focus is on higher dividends and efficiency in asset utilization,